This episode is brought to you by Rev1. Rev1's mission is to help entrepreneurs build great companies. As you navigate the waters of business entrepreneurship, you don't have to go it alone. A strategic partnership with Rev1 connects innovators to the talent, customers, space, and funding you need when you need it. Get started with Rev1 Startup Studio by visiting rev1ventures.com to learn more. Again, the website is rev1ventures.com. All right, guys, let's all be honest with ourselves. How many times have you needed to get an oil change, clean your car, or get a tire rotation, and you've put it off for weeks on end? We're all guilty of it. My friends over at Vant set out to make delayed car care a thing of the past and created the most convenient and affordable way to care for your car. All you have to do is, 1, book your service and desired pickup location. 2, drop your keys with a certified Vant driver who picks up your car for you. And 3, your car will be serviced and delivered back to you within 3 hours. From now on, the only thing you have to worry about is where you're going and who you're going with. Look, guys, I'm telling you, this is the future. Try out Vant, VOHNT.com, and use promo code 614startups for 20% off. All right, 614 Startups Nation, welcome to another episode of the 614 Startups Podcast. We source our guests far and wide, and we got somebody coming at us from the coast, my special guest, Bianca Caban, partner at Heartland Ventures. Bianca, welcome to the show.
Thanks so much for having me, Elio.
All right, so I've had your partner on the show, Max, and he represented for Heartland. But, you know, like the whole startup world, you know, we could use a little bit more diversity. So when I heard you were part of the team, I said, I have to have Bianca on the show. We need to get a female perspective. And is it Latinx or what's your background?
Yes, Latinx.
Right. And so kind of getting that perspective as well, how you got into the world of venture and then breaking down some lessons, right? How can we learn from your experience for all those founders out there who are looking to raise around and scale their startups? So thank you so much for being here.
Thanks so much again for having me. I'm excited to be here.
All right. So I read a little bit of the backstory, but I love when people tell their own stories. So why don't you start us with, you know, kind of how you got into this world of startups and how you became a partner at Heartland?
Sure. And I have to just quickly fact check you. I'm actually a principal at Heartland. So.
Oh, excuse me. All right.
That's okay. That's okay. Just want to make sure, you know, we have the facts straight. But yeah, no, I'm happy to share a bit more about how I landed a role in venture. So I guess briefly about my background, I graduated from Harvard and started my career on Wall Street back during kind of the financial crisis in 2008, 2009. And that was obviously really interesting. Kind of was an equity research analyst at Credit Suisse. And then also ended up working at BlackRock, which is one of the largest asset management firms in the world. And then did a stint at a small private equity shop that was kind of establishing its first couple of investment vehicles, including investing in banks in sub-Saharan Africa, which was really interesting. I had the opportunity to travel to Nigeria and Europe and the Middle East in the process of kind of launching that vehicle. And that really inspired me to kind of go out on my own and work with entrepreneurs that I had met throughout the world and investors to work on some of my own passion projects. I started a small consultancy focused on the tax and economic incentives in Puerto Rico, where my grandparents are from, and basically was connecting the dots between capital in New York, family offices, venture capitalists, and high net worth individuals with opportunities to establish tax efficient entities in Puerto Rico, but also to invest on the island towards in economic revitalization projects and also backing early founders, which I knew I had seen, you know, really worked in some of these fast growing economies around the world of, you know, backing founders that have big visions. And, so that's something that I wanted to work on. I also started a nonprofit business accelerator for women-owned businesses in Puerto Rico and in New York called Access Latina. And that also kind of really spurred my interest in getting involved in backing early stage founders. So ended up kind of thinking through how I would pivot into the world of venture and decided that getting an MBA would help me do that. So got my MBA at Columbia in New York, and then ended up moving on to work at a fintech startup called Republic. And for those who aren't aware, Republic is an equity crowdfunding platform that spun out of AngelList in 2016 when regulation crowdfunding was passed by the Jobs Act. The SEC kind of made an addendum to the Jobs Act that allowed for non-accredited investors to invest in startups online. And so at Republic, I was employee number 10 or so. And basically now they actually just announced today a massive global acquisition of one of the first equity crowdfunding platforms in the world, Seedrs, based out of London. So they're exploding and growing very quickly. And it was exciting to be part of that growth in starting, in 2018 when I joined them through to when I joined Heartland. And really the switch over to Heartland was an opportunity for me to get back into the kind of investing side of things where I started my career, and something that I was really passionate about, of really allocating capital directly to founders. Whereas at Republic, it was through a platform approach, which is super exciting. And it was more of an operator role. Now at Heartland, I'm investing and focused on managing our co-investor relationships out here in the Bay Area, as well as managing kind of deal flow for the firm across really the country and globally as well. And with COVID, we're increasingly speaking with founders across the world, which is exciting. So that's a bit about my quick background, and happy to dive in or talk more about Heartland.
Listen, there are so many interesting threads to pull on there, but we're going to have to do that in person over coffee, because we want to get to the nitty gritty of kind of the work you do and how founders can really understand the investor perspective. I think in life, we all have our lens, and to practice empathy and kind of sit in the other chair to get the other side is very important, especially when you want to do business with somebody. So the lesson started right out of the gate. You corrected me, principal, not partner. Please tell me the difference at a venture firm when I'm talking to a partner or I'm talking to a principal.
Yes, for sure. So just typically at a venture firm, the hierarchy is kind of analyst, associate, principal, and then partner is kind of typically how it works. And so I joined as a principal, which is sort of a kind of a path to partner position typically, and usually doesn't involve like direct check writing abilities most of the time, but you're kind of an apprentice. And I actually work closely with one of the partners at Heartland, and kind of in this kind of apprenticeship model, that's kind of the next step for me as I kind of grow into that role. But so partner typically involves kind of check writing abilities, your own book of business, so to speak, in terms of what startups you can invest in independently, and kind of that's the main difference.
Mm-hmm. And I think a lot of founders, they like to hear somebody, oh, that person is an investor, because they directly correlate that with the person who can write the check. But all of those roles within a venture firm are very important, right? They play a critical role in getting that deal flow through all the way to the point where a partner is writing a check. I want to explore the role of the principal and what your objectives are. Like, what are the things that you're positioned to really execute on in the role that you play when you engage with founders?
Yeah, absolutely. Happy to do that. So in terms of, to your point, sort of the different roles within a venture firm, associates and principals are certainly really the folks that are in the trenches oftentimes in terms of meeting with founders, kind of being that first line of defense for the partners of the firm to be able to, sort of bring the best, most interesting opportunities and surface those on behalf of the firm. Because, we look at Heartland at least 75 deals a month, and we're speaking with a good chunk of those deals / founders that are coming into our pipeline. And so really my job is really to speak to as many founders as I can within our industries that I think would fit within our thesis, and to really be incredibly open-minded about taking that first meeting to really understand, is this something that is compelling, could fit within our thesis? And so in terms of from a founder perspective, I think, those associates and principals at venture firms are actually kind of going to be your biggest ally in the process of getting funding in a lot of ways, because they are really oftentimes the ones that are going to determine whether or not an opportunity is going to get to that next stage where a partner might be getting involved at that point. And so I think it's very strategic to be friends with sort of the more, I guess, junior folks at these firms for sure. And I think that, the way I see it, on the flip side is what I'm looking for when I speak to founders is to understand obviously some of the the things, the kind of the checkbox things, is it in our sectors? Does it fit our thesis, which I can talk more about? But also, am I excited by the idea in the sense that is this something that, kind of jumps off the page for me? So, so to speak, where the idea or the founder is just so compelling and different from anything that I've seen or heard, or their approach to what they're to tackling a problem in one of our markets is just kind of sort of either is so compelling or inspiring in some way that I am going to take that deal to our weekly, investment committee deal flow meeting and advocate for that deal as something that we should really look at. And so I think, I don't know, kind of in sum, I definitely think that really being the first line of defense and being in charge of the deal flow for the firm is a really important role. It's a role that carries a lot of weight because, again, you are filtering oftentimes and making decisions as to what gets to that next level. And that could, oftentimes involves filtering out, which is hard to do. It's really definitely a difficult thing to do because there's so many amazing founders and companies out there, but really our firm is looking for something quite specific, which I can get into.
Yeah, let's jump right into the specificity here. So you mentioned thesis and industries. So what's the thesis at Heartland Ventures and what industries
Sure.
are you looking at?
Sure. So just a really quick overview on us. So we focus on seed and Series A in terms of stage that we're investing in. And we're headquartered in Columbus, Ohio, where you're based and where I'll be next week. And we actually, so our fund is interesting because we have about 70, actually closer to 80, 90 now with the closing of Fund 2, strategic LPs who are all corporates. They're either presidents, executives, owner operators of mid-market corporates based in the Midwest. And they're operating in industries that are legacy to the Midwest. So construction, manufacturing, supply chain, logistics, transportation, and real estate. And so what we do at Heartland is a little bit unique versus other funds where we're investing like a normal VC at that seed stage. But then we're also looking to bring significant revenue and customers to the table, to our portfolio companies, even before we invest. And then definitely upon investing, we get really involved in business development in terms of driving their Midwest expansion. And that's what our real value proposition is. We really bring customers to the table and capital as well, of course, as we're a firm, but we bring customers as well and customer diversification relative to many of the founders that we're speaking with are based usually outside of the Midwest. And so maybe they have access to customers in their state or where they're located on the coasts or wherever, but really a check from Heartland involves that customer diversification and access to the Midwest corporates, which oftentimes based on our industries is very strategic. So that's a bit about how we invest. And that's what I'm really looking for when I'm, vetting founders and understanding if it makes sense to kind of, basically learn more about what they're building is kind of, are they in our industries? Kind of, are they in our stage? And then I think about a little bit, but oftentimes we'll discover this on an initial, call. I think about, do we have LPs in our network that could be customers of this? So what that ultimately ends up meaning is a lot of B2B kind of SaaS companies, or if there's hardware and a SaaS component, they're selling directly into other businesses versus direct to consumer, because that's not, it's just out of our scope.
Yeah. So I imagine, let's say one of your LPs is like a mid-market trucking company. We know truck maintenance costs are, probably a big component of their expenses. Somebody has a pretty cool technology to reduce the wear and tear on a particular part that's super expensive to replace. Makes sense that you could, that would kind of start to, the antennas would start to go up, right? And I'm just using that as a broad example. It's industry specific. It addresses a problem. They're doing it in an interesting way. Bianca says, okay, maybe we got something here. Is that how it works?
Yeah, I would totally agree. I think that's exactly, my kind of train of thought. And, oftentimes what we're doing is really trying to connect the dots between the pain points that we're hearing from our LPs all the time, their challenges, opportunities in terms of running their business, how they, what they're really wanting, how they can become more operationally efficient. A lot of times that's sort of software that's around, workflow, productivity type of software. So in your analogy, maybe it's maybe less on like the sort of hardware innovation or material science of a part of the truck, but maybe more like helping them with their back end, accounting software tailored to the trucking industry that's really unique and and really compelling in terms of cost that it saves them or revenue that it drives. So usually it's typically that kind of a story that we're looking at most often.
I got you. You got me iterating here in real time to kind of to massage my solutions here to fit within your thesis, but I do understand exactly what you're saying. And that is a perfect point to take a break. Guys, you've been listening to my conversation with Bianca Caban, principal at Heartland Ventures. We'll be right back. Support for 614 Startups comes from Color-Coded Labs. It's time for a better career in tech. Introducing Color-Coded Labs, a 16-week boot camp that does more than just teach basic code. It's a program designed to help you actually get a career in tech. At Color-Coded Labs, we've removed all the barriers to help you learn the skills you need to start a career you love in weeks, not years. All designed for people of color by people of color. Apply now at colorcodedlabs.com. Support for the 614 Startups podcast comes from Book and Street. Book and Street provides finance and accounting solutions for startups in the Midwest and beyond. From strategic financial support to bookkeeping and everything in between, they've got your back office covered. Let their experienced team of finance and accounting professionals help your startup get it right from the start. Learn more at bookandstreet.com and set up your free 30-minute consultation with their team today. All right, welcome back. I'm continuing my conversation with Bianca Caban, principal at Heartland Ventures. All right, Bianca, so we've laid the premise now. We're going to go into a little bit of the meat and potatoes, okay? So you said that you guys evaluate about 75 deals each month, all right? So how are you sourcing these deals? How are these deals coming across your table? And not all deals are created equal, right? So give me the deal checklist. What makes a deal, in your opinion?
Sure, happy to. So in terms of the channels and how it kind of breaks down in terms of how we're sourcing deals, it's really through a few kind of ways. First, it's kind of the most important kind of channel in terms of where we source deals is through other investors, who we call co-investors. So they're either investors who we've invested alongside through other portfolio companies, or we will hopefully one day very soon. But they are relationships with other VC investors, kind of who operate in our spaces or are kind of more generalists, but are interested and have a focus on our spaces. And we kind of build relationships with them across the firm. And they're kind of based everywhere. A lot of them are based in the Bay Area and New York, where the majority of investors are. Kind of, I think our relationships mirror kind of the concentration of investors across the country. We have co-investors in the Midwest and even a few globally as well. And what we do is just really, it's a relationship business in some ways. So we're constantly maintaining relationships with them, catching up with them with a regular cadence to understand what they're looking at, what's exciting to them, and share deals in that kind of way. And then even in terms of that, I would just say one nuance is there are so many really awesome VC communities now through Slack and other groups like, kind of interfaces like that, where it's no longer, what's exciting about the VC industry, and I think a step forward, is that it's no longer where, you have to have gone to the same school as that person or whatever. You can now just reach out to someone on Slack who's part of your same community, whether I'm a part of several identity-focused VC communities, so women or Latinx. And then I'm also part of like a pre-partner VC community called the EVCA, which has probably at least, I would say, around a couple hundred, if not 1,000, thousands of investors on there. And basically you can just reach out to them directly and say, hey, it looks like you're investing in similar space to me. Would love to hop on a call. And that's kind of part of our process of deal flow and how we generate a lot of our deal flow. And then the second way I would say is through really incredible top tier accelerators that are being run globally across the world and obviously here in the US. So, I mean, of course, there's Y Combinator, there's 500 Startups, Acceleprise, Capital Factory down in Austin. There's a Creative Destruction Lab out of, I believe they're Toronto based. There's a couple other really, 500 Startups, if I didn't mention them, Techstars, of course I should have mentioned them right away. These fantastic accelerators that have incredible deal flow that they've curated and at an earlier stage than what we're looking, where they're great. It's a great pipeline for us. So we have relationships with those accelerators. We're mentors for them. We, kind of attend demo days for them. And that's another big source of our deal flow. And then I think the third bucket is kind of categorized in terms of deal flow that we source through our own research that is informed by our, very close relationships with our LPs, who are Midwest corporations who we, have access to and we speak with daily. They're one of the folks on the team, Connor McGinnis, who's based in Indianapolis. His kind of job all day long is to speak with our LPs and understand their pain points. And then he communicates that back to myself and Mark, the partner I work with, who are on the kind of the deal team for Heartland Ventures. And so we basically are kind of looking at the world from that lens to say, these are the top pains and opportunities and challenges that our LPs are facing. Let's go proactively through our own research, find startups that are building solutions that solve those, or that are, kind of approaching the world in a way where maybe our LPs aren't asking for that solution, but we know that it will inherently end up solving their problems. And so that's another place that we source deals, is through our research of, looking at newsletters or looking at TechCrunch and other kind of forums that talk about founders, Twitter, kind of, it's definitely a kind of boots on the ground type of operation in terms of deal flow. So it's definitely, kind of comprehensive, but that's how we think about it.
Yeah, I was waiting with bated breath for you to say the 614 Startups podcast, because we know how to pick companies over here. All right,
exactly.
Our guests
I should have
elite.
said that. No, I should, but it's a great example of, I might put something like this in the same category as like a Twitter, like social media or media. There are so many amazing founders being featured on podcasts like yours, exact communities like yours, I would say, that are really, critical to how we source deals. So yeah, no, absolutely. This is definitely going to be a go-to spot for us for sure.
All right, you heard it. Bianca said that 614 Startups is a go-to spot to source deals. All right, so let's talk about our deal checklist.
Yes.
Right? So a founder might think they're pitching you a deal, but they may not have all the components to even be prepared to pitch you a deal. So I know you source from your investors that you work with, which they're going to kind of bring deals to you. But when you're doing your own independent research, you're looking at things on Twitter or Instagram, or you're watching 614 Startups, what is that deal checklist you like to see when you're approached by a founder?
So yeah, exactly. I think what I'm looking for is, are they within our stage? So if they've raised, we have tools as well to understand this, like Crunchbase and PitchBook, but understanding a little bit before I even reach out to them or before I put them in our pipeline, how much capital have they raised? If they've raised more than $10 million, usually that's a little bit larger, it's a little bit later stage for us to invest in. So I'm looking first and foremost at, are they kind of building within the spaces that we're looking at like, construction, logistics, supply chain, real estate. And we do look a little bit at sort of HR tech, just given our LPs have anywhere from, 100 to 15,000 employees, but more along the lines of staffing technology versus just pure HR tech, which oftentimes targets like knowledge workers, versus we're looking for, HR tech that targets more sort of frontline workers, construction, skilled workers and unskilled workers, things like that. But I'm looking for those sectors. I'm looking for the stage, and usually I can determine that by how much capital they've raised total. That's usually publicly available through our data sources. And then what else am I looking for? I mean, that's really it in terms of just, I also am looking for, based on my knowledge of our LPs, do I think we can bring customers to the table? So for example, if it fits all the stuff that I just mentioned, but then it's focused on direct to consumer somehow, then it wouldn't be a fit for us in that sense. So if it checks all those boxes, then I would love to hop on an intro call with that founder.
All right. So let's say we meet the industry requirement, the product version 1 works reasonably enough to see, hey, if we iterate on this thing, we can get to it. A lot of founders run into the question of traction. I didn't hear
Right.
you mention that because I think maybe you guys have a secret weapon, which is if it works well enough and it really solves a problem, we can get you traction,
Yeah.
right?
Well,
For lack of a better way of describing it.
so I think I was more describing my process of, kind of the requirements that I need to for that deal to make sense in terms of just learning more.
Mhm.
Once I'm on the phone, then we have a huge, long checklist of questions that we're asking, trying to understand. And I think they roughly fall into kind of five buckets. And I kind of describe it as like five T's. We like to call it, well, it's kind of my own little acronym. So it's like team, traction, technology, terms, and TAM. So I can break down each one, but we have again, a comprehensive, initial diligence questionnaire that we're filling out as we're discussing, meeting with a founder. And we're looking for, different things within each one. But certainly, of course, traction is one. And when it comes to traction, so at that seed stage, and this is Heartland specific, it varies from firm to firm, we care less about revenue and more about growth and customer traction, meaning, that there, month over month, there is a velocity and an increase in the amount of customers being acquired, even if they're kind of free pilots that will convert to paid over time. But we're really looking for that customer traction. And then we're looking for customer feedback and case studies around the ROI that customers are getting from the early days of utilizing the solution. And that's important uniquely for Heartland because as we involve our LPs in our diligence process, which we do to validate technologies, we'll involve them even before we invest. The first thing they're going to ask is who else is using it and what value are they seeing? So that's something that's really important to me to understand pretty early on, and something that we care a lot about. Again, we care a lot less about revenue traction because, a lot of times we're at that seed stage, it's still very early. And so, we're not focused on revenue quite yet. Maybe at the Series A stage, we're much more focused on revenue at that point. And we do fewer Series A, we do mostly seed as our sweet spot. But yeah, we're really looking for that customer traction.
All right. And you mentioned team, right? So
Yes.
what are the components that make up a great team? Right? What gets you excited when you see these components present on a team that you're looking at a deal for?
Yeah, it's a great question. And I think, again, speaking just from the Heartland perspective, and it varies from firm to firm, what we're looking at for team is really, given that the solutions that we invest in are really in industry, kind of construction or manufacturing, logistics, it's great to see if one or both founders, or if most of the folks on the founding team have had actually direct industry experience in that space, so that it's an indication for us that they sort of intimately and uniquely understand the pain of our LPs, which we're going to bring the technology to, because they've lived it. They've operated in construction, for 5 to 10 years, or in logistics, or they worked at a fast growing construction tech company, and they understand how to build a solution at scale for that industry. They understand what it takes, the sales cycle, all that great stuff. So we are looking for industry expertise a lot of times from our founders, which tends to mean that they've been, in terms of their career, they've probably had, at least a decade of work experience, to where they've experienced this pain and they're saying, I want to go solve this problem. And they're very passionate about the problem. They've touched it personally, et cetera. So that's typically, it's a broad stroke, and obviously there are exceptions to that, but typically we're looking for that industry expertise. And then I think certainly there are some qualitative things that we're looking for, and that, we've been able to suss out via Zoom, which is interesting. And then obviously a little bit more in person more recently, but things like kind of, is that founder receptive and open to feedback? Do we think they have the ability to hire just a stellar team and convince people to come join them on this crazy startup journey? Do they have the ability to raise capital down, after we write a check? One of the biggest indicators of success of a founder is, can they raise that next round? So obviously we will be involved in that, but can they convince other investors that we bring to the table, or that they need from their network to invest in them? And that's a little bit more qualitative. And, it's just a bit of a dance to assess those like sort of more nebulous qualities. And, we have certain ways of assessing those, but that's going to be really important. And I'm trying to think of any other, big things on the founder. I guess I'll pause there, see if you have any questions.
Yeah. So let's say you have the team and it's like they're finishing the LP's sentences, right? They understand the problem and they're like laughing, they're going out it's just match made in heaven, right? They're adding new users, even if it's free, or the growth is there, right? You're getting real excited, right? The TAM is there, big market, open for disruption. A lot of people are looking for this solution in this market, and you're super excited. When we come back from the break, you're going to take us behind the curtain for how you present ideas you're excited about to your partners and how you guys hash it out to see which ones are going to get the investment. All right, guys, thank you for hanging out with us. My very interesting conversation with Bianca Caban, principal at Heartland Ventures. Hang on, we'll be right back. Support for 614 Startups comes from the law firm of Dickinson Wright, with around 500 attorneys working from 19 offices across the US and Canada. They handle all types of business transactional law, including advising privately held and venture capital-backed companies in capital raising, mergers and acquisition, and transactions involving technology, software, data, and e-commerce. Partner Alex Brown serves as outside counsel to startup companies ranging from business entity selection and formation, protection and commercialization of technology assets, conducting business online, and data security issues. For more information, visit dickinsonwright.com. Support for the 614 Startups podcast comes from Bernstein Private Wealth Management's Columbus-based team of professional advisors. In a world where most investment managers look alike, Bernstein Private Wealth Management has evolved into an organization like no other. Some money managers look to add value after a business is sold, but Bernstein delivers proactive advice right from the start. Whether you're eyeing the exit or you've just launched, Bernstein is committed to your financial success. If you're interested in partnering with Bernstein on your entrepreneurial journey, visit bernstein.com to learn more. Again, that website is bernstein.com to learn more. Bernstein, fully invested in better outcomes. All right, 614 Startups Nation, welcome back. We are gonna go behind the Iron Curtain, all right? Unless you're an investor, this is like the Iron Curtain, East Germany, Russia style, right? She's gonna take us inside what happens in a venture firm when a principal is excited and presents an idea to a partner. So what does that process look like? You think you have a deal here, you think this deal is doable. When you go to that weekly meeting, what does that look like?
Sure. So, it's a lot less, I think, exciting and actionable than it would seem, in the sense that it's not like, I attend that weekly meeting and I'm like, just insanely passionate. And I'm like, guys, we have to do this deal. Like, there's no way it's a lot more measured than that. At least at Heartland, our style is a lot more measured and rational. And I think the reason why is because we have a lot at stake with this, large and sort of, I think the level of executives in terms of our LPs is a big deal. So we have a lot of responsibility and a fiduciary responsibility to basically manage their money, but also really bring them solutions that are actually going to be compelling. And also, we don't have a ton of their bandwidth in the sense that they are successful operators running profitable businesses. If we're taking time out of their calendar to talk to them about a solution, we need to have vetted it properly and really, really feel good about it before we do that. And so with that said, the process is a bit of a slow drip, in the sense that if there's a technology that I think is really compelling, whether it's a combination of team and product and what they're doing in the market, and it's very different, and I think it can be really, there can be a lot of sort of Heartland fit to bring to the table, we'll kind of introduce it during that weekly call and get the rest of the team's input. So I will brief the team on what it is pretty factually, and in terms of their business model, what they're building, how it fits in, and then we have a discussion on, okay, this is compelling, and we think this is an exciting opportunity in terms of just a venture backable opportunity. And then we have a conversation of what can we bring to the table? How can we add value to something like this from our network of LPs and industry leaders beyond our LPs, even in terms of customers to bring to something like this? And then what we do after that is, if we kind of feel like this, it makes sense, we'll, before we even do that, we'll have kind of several calls with that founder to go through in depth, basically everything we discussed prior, but even in more detail, plus a product demo, which in this day and age, we oftentimes try to record it so that the rest of our team, if they can't make it, can really see the product and really understand it. And then our team starts to socialize that. Once we gain enough conviction from a VC perspective and from a product perspective, our team starts to socialize that with LPs that we brainstorm could be great fits for something like this. And we kind of take it from there. But in terms, so there, it's not this kind of movie scene that you kind of think of where it's like I'm going in and like guns blazing, like we have to invest in this. It's much more measured than that, which again,
is it a construction, like everybody in the construction world is just chilling? I mean, do you guys get hot deals that are oversubscribed, like where investors are going crazy? You're like, yo, this is the technology of the decade or the century or whatever. Like, do you ever have situations where you're like, we can't miss this? Or is it like, oh, well, it's trucking, so, we'll kind of take our time on this? I mean,
I see. Yeah. I see what you're saying. And I think like those we're describing as like those like hyped up deals where I almost get a little nervous about those deals. Like, when there's too much buzz and you're just like, we actually like meeting founders even before they're actively raising. And whenever a founder's like, I need to finish this in 2 weeks, it's like, it's just not going to be a fit in that sense, because of course we can certainly move that fast if we needed to. I think, that's possible for us to do. We could just, call it, you just expedite the process tremendously and make it happen. But that would be a very, very special situation. Usually we're speaking with founders that are raising, but they're, they're a month or two away from actually like closing the process. And we have time to get to know them deeply, to get to know their product deeply, to engage them with several of our LPs, to do diligence with our LPs, get the feedback from our LPs, and really make a very informed decision as to how to move forward. Because really, we're investing in 3 to 5 companies a year, and we see, as I mentioned, 75 a month. So if we're going to make an investment, we have to really feel very good about, and of course it's risky. I'm not saying that we have de-risked the investment, but we identify all the risks and we're comfortable and have mitigation strategies for those risks. And so anyway, the point is that yes, we do get deals occasionally that are hot deals, hyped up deals that, move very, very quickly. But in reality, we would rather meet a founder a little bit earlier on in their process, and even before they're raising. A lot of times we've even, encourage founders to say, let us invest even before you raise that next round and be your partner to your business development partner in the Midwest, and kind of preempt rounds like that. We've done that once or twice before. But the reality is that, the whole kind of BC, kind of Silicon Valley story of like everyone piling into a hot deal, we actually I think we have enough of a unique edge in terms of information that we're getting from these mid-market tech buyers that we feel like we can really suss through the market and understand what's actually compelling and what's just hype. So it's a measured process. But I think just taking a step back to your initial question of like, how do I convince, or how do I, communicate a deal that I'm excited about? I think when it comes to that, there has to be a level of conviction that I'm conveying to the partners, but also I think it stems from the facts. So my approach tends to be more fact-based, to say, this is the market, this is the opportunity, this is where they are in terms of what they're addressing, this is where the product's going to grow into. And I think that, I think that they're going to be able to capture the market, the X% of the market for this reason. But we can validate that with feedback from our LPs to say, is this something that actually our LPs will invest in? And so I think for me, building conviction means laying out all the facts in a way that's compelling and succinct, and where really it's sort of one of those things where the partner's like, yeah, you're right, this is compelling for all the reasons you outlined, versus just kind of saying like, oh, this founder's amazing and they blew me away, I think we should definitely, it's less about that, which hopefully leads to a more objective process in a lot of ways.
All right. So I see you're very message disciplined. You're exercising that facts-based, very logical presentation here. I like it. All right. So let's say we clear all the hurdles and you make a fact-based decision. This is one of the 3 to 5 companies we're going to invest in this year. What does the rest of the cycle look like, right? What does the future look like for that company working with Heartland Ventures?
Sure. So usually what we do is right upon investing, we'll put together a plan in terms of a roadshow.
Check size typically.
Yeah, check size is around $1 million at that seed stage on average. And we'll put together a plan, almost like we're sort of like an outsourced business development team for our founders, where we'll say, okay, we'll have them come out to increasingly more with everyone being vaccinated, come out physically to Columbus and Indiana and meet with LPs in person. And even beyond that, put together a roadshow for them, a customer facing roadshow for them in the Midwest. Usually we'll organize that right upon investing and nail down dates for that and get that going. And then a plan, a very concrete plan around, the number of customers that we plan to introduce them to within a certain time frame and the revenue we think we can get as a result of that. So it's a very clear business development plan, and we are, in the trenches with them in terms of not just making those intros, but helping convert those intros to customers. And that's really important for our founders, because intros are great, but they're at the end of the day, they're bandwidth constrained being early stage founders, and they don't, maybe they hired a head of sales or a VP of sales, or maybe they don't. And so we're kind of that for them in the Midwest. And so we're following up on leads and building our relationships to facilitate them closing opportunities within our network. And we get really, really involved. And so that's a bit unique to Heartland, but it's part of a big reason why we get a seat at the table to some of these really strong companies, because we have that ability to bring that business development to jumpstart their Midwestern expansion.
Yeah, I really like that. And I really like that as a competitive advantage. I know you hear it all the time. And I know there's some investors locally here that have the ability to do that, right? They just have those relationships. And the fact that your LPs are integrated throughout the process really means that, hey, if you make this investment, it's like you're virtually like, you're going to have a few customers here and you can start booking some revenue. My question to you is, as you've rolled out technologies that you've invested in, how many portfolio companies do you have right now?
We have currently 13.
All right. Are your LPs having to find new budget dollars? Meaning, are they typically investing in new disruptive technology, or do you find that they are shifting expenses, meaning they already have some provider that's inefficient and switching to a company? What are you finding, or is there a ratio between that when they're thinking about bringing on new technologies?
Yeah, it's a great point that you're hitting on, where sometimes our LPs will say, look, for every one new company that I look at, I need to eliminate, 5 or 6 software as a service technologies that I'm currently paying for. It's like one of those things where, yes, because the industries that we operate in are so complex and there's so many issues that need to be solved, it can sometimes feel like to our LPs that little bit of fatigue of like, a solution for every problem. And so that's why our job is to really curate and only bring to them the most compelling opportunities that we see are going to be, fundamental in terms of impacting their business, versus just what we call a point solution. That's just going to solve this one thing, but then you need something to solve this and this and this and this, right? So we're really looking for technologies that are really doing something different, and that where, they're not having to, so it's a balance, right? Because a lot of times technologies that we're investing in, they're not necessarily outright, replacing those incumbents per se. They're oftentimes integrating with those incumbents, like your Procores or SAPs, or some of the incumbent ERPs and TMS solutions and things like that. They're oftentimes integrating, and it's a gentle disruption where over time they aim to replace, but meanwhile they're integrating and making sure that there's no double opt-in, or double entry, issues or anything like that, where an LP is going to have to now enter data into 2 different things, right? So that's something that we're looking for in our diligence is, how gentle is the disruption? And then what is this replacing? What other startups are out there that our LPs might be using? And we definitely will learn of competitors, of the companies that we're evaluating from our LPs. They'll say, well, I'm actually piloting this other startup. And we're like, oh, we'd love to connect with that startup. And since you're already using them, let's learn more about them, right? And that's awesome. Another awesome piece of like competitive advantage and information that we get from working with mid-market corporates. But I guess basically just to, in some, there are a lot of software solutions out there, and it's almost like so many things. And even in the trucking industry, there's like an app. There's so many different trucking apps, and there's this app fatigue going on with drivers and trucking companies. So we really have to be careful of that for sure. But that's kind of our job, to curate those really opportunities that we think are going to be fundamentally improving or shifting their business in a whole new way that they didn't even think was possible. And we love to hear the word game changer, and it happens a lot. And we've invested in companies, based on feedback like that. But when we hear that from our LPs, where they'll say, construction tech or a logistics tech, and they'll say something like, this is a game changer. If this is real, and this founder's promise is actually can come true and really is doing what they say it's doing, this is a game changer. This would be a game changer for my business. And they don't say it that often, but when they say it, we're like, okay, this founder's onto something. Let's dig in even further. So that's what we're really looking for.
All right. So I'm going to ask my last question. This is about as tricky as I'm going to get on this podcast. Okay. So I hope you're ready, and then you're going to have the final word.
Okay.
What are the risks of having your investor also be your customer? Are there risks for a founder to accepting money from the investment side for the same person that's also going to be your customer?
I think it is a good point. But just in terms of like the industry, you're seeing a rise in these sort of corporate VCs across the board, right? In our industry, many of the industrial companies have like innovation arms. Some of the largest general contractors in the world have innovation arms. We work with those investors at those innovation arms and all that kind of stuff. So I think it's more sort of normalized than you would think in that sense. And the thing about Heartland is that we're unique in that we don't have just one or two strategic LPs that are massive and, very, influential in our process. It's more of a just kind of distributed model in the sense that we have like close to 90 or maybe more at this point in investors across fund 1 and fund 2, and they're all again attached to a corporation in some way. And that's great in terms of breadth and access that we get to diverse and many different kinds of corporates to be able to bring to vet technologies with. But it's not like one or two of them have some sort of influence or say over our investment process. We are independently run, and so they are financially motivated, so they're invested in Heartland because they're expecting a return. But again, they're also motivated by getting access to technology. But I think again, just because we have so many, and it's not where one or two have so much influence, it's not, I think, as much kind of pressure as you would think from a founder of like, now I've taken in money indirectly from this one company that, what if I wanted, like you hear stories of like founders that receive, corporate venture dollars, and then they, almost either, the tricky things can happen where they're just very influenced by that one corporate to build their business in a certain way or something like that, right? And that's just not really the case with us at all, because it is very separate. But it's kind of the best of both worlds, where we can leverage this broad network of potential customers, but not one of them is so powerful that has a say in kind of the outcome of our investment or like sort of the path that the founder that we invested in has to take. It's totally separate in that sense.
All right, awesome.
Hope that helps.
Yeah. No, I try to be tricky there at the end. All right, well, you get the last word, okay? Anything on your mind, anything that we haven't touched on? How do people get a hold of you if they do have a deal, et cetera?
Yeah, I just wanted to say that I know that you've built a really strong and fast-growing and energized community with 614 Startups. They're right there based in Columbus, where we are also headquartered. And I just wanted to say that one thing that we are certainly focused on is, you mentioned kind of deal flow channels, is that local kind of community development aspect of understanding who are the founders in our own ecosystem, in our backyard, and what are they building, and how can we support beyond investing, but through mentorship or connecting them, to our LPs in ways that we can be supportive. Because our community in the Midwest is very important to us. And so certainly we would love to speak with founders who kind of meet our criteria and see if there's an opportunity to partner with them and invest in them. But also we just want to just be more active and involved in the local Columbus and Indianapolis and Indiana and Ohio more broadly tech ecosystems, because that's where we're headquartered, and that's kind of where our entire LP base is. And one thing is our LPs are very passionate about their own communities and giving back and creating jobs. And that's something that we're also very passionate about. So if there are founders out there in those ecosystems who kind of meet our criteria, or even, are interested in kind of meeting us and getting to know us a bit more, would be happy to meet them and have that conversation. And my contact info is bianca@heartlandvc.com. So happy to always, take inbound emails and set up calls.
All right. Well, 2022 has a lot in store, including opportunities just like that for investors and startup founders as things reopen fully, to connect, right? To mentor one another, to engage with one another, to be more active. So we have some stuff up our sleeves for 2022. And Bianca, it almost sounded like you were offering me a scouting job, but I'm really hot right now in the scout market. So, you're going to have to come right with that offer. All right, Bianca, thank you so much for joining us on another episode.
Thank you so much for having me, Elio. Excited for the continued partnership with you and your community.
All right, thank you. All right, there you have it, 614 Startups. You now have a master's degree, right? An MBA from Harvard, Columbia grad, breaking down the world of venture capital. So you shouldn't be intimidated. If you have an idea, reach out to Bianca, talk with them, and maybe Heartland Venture might not only be the company that gives you capital, but introduces you to that next great client. Until next time, peace.